Listen up, folks. The Federal Reserve's interest rate decision on September 18th isn't just another date on the calendar. It's a potential market earthquake, and we need to be ready for the aftershocks. At 7 p.m. UK time, the Fed will announce its decision, and believe me, it'll send shockwaves through every corner of the market, from stocks and bonds to gold and even those crazy cryptos. We're talking about the future direction of the economy, folks. Will the Fed slam the brakes on rate hikes, or will they tap the brakes? This isn't some theoretical debate. This is about your money. Fasten your seatbelts, because a 50 basis point rate cut is a real haymaker. This is the Fed shouting from the rooftops. We're here to juice this economy. Stocks, they're going to love it. We're talking about a potential surge, a real rally as investors pile into risk assets. And bonds? Yields could drop like a rock as investors chase those fixed returns. Gold? It's the classic safe haven, and a weaker dollar could send it soaring. And cryptos? Hold on to your hats, because a risk-on environment like this could ignite a crypto rally for the ages. But hold on, there's a flip side to every coin. What if this bold move backfires? What if the market sees this massive cut as a sign of desperation? A sign that the economy is in worse shape than we thought? We could see a panic, a flight to safety that sends shockwaves through the markets. It's a high-risk, high-reward play, folks. All right, let's say the Fed takes a more measured approach, a quarter-point trim. This is the Goldilocks scenario. Not too hot, not too cold. The dollar might weaken a bit, giving stocks a little boost. Bonds? They'll like it, but nothing to write home about. Gold? It might hold steady or inch up slightly. Cryptos? They could see a little bump, but nothing too crazy. But here's the catch. What if the market sees this as a sign of weakness, a sign that the Fed is too timid to truly tackle the economic challenges ahead? We could see a hawkish repricing, where investors start betting on more aggressive rate cuts down the road. This could lead to volatility, folks. The market wants certainty, and a small cut might not be enough to satisfy their appetite. Hold the phone! The Fed decides to stand pat, keeping rates unchanged. This is the Fed saying, "We've done enough for now, let's see how this plays out." Now, this might seem like a neutral move, but trust me, the market will have a reaction. The dollar? It could strengthen as investors seek higher returns. Stocks? They might not like this one bit, especially if the Fed sounds hawkish about future rate hikes. And bonds? Yields could climb as investors demand more compensation for the risk. Gold? It thrives on uncertainty, and a hawkish Fed could cast a shadow over the precious metal. And cryptos? They're already on edge, and a hawkish surprise could send them tumbling. This scenario is all about reading between the lines, folks. The Fed's tone will be just as important as the actual decision. Chapter 4, Scenario 4, the one-and-done cut. Here's where things get interesting. The Fed cuts rates, but signals that this is it, the last cut for a while. They're tapping the brakes, but they're keeping their foot hovering over the pedal. This mixed message will send ripples through the market. The dollar? It might strengthen initially as investors digest the last cut message, but then weaken as the reality of lower rates sets in. Stocks? They're a fickle bunch. They might cheer the cut initially, but then sell off on the realization that the gravy train is ending. Bonds? They'll be watching the yield curve like hawks, trying to gauge the future path of rates. Gold? It's anyone's guess, folks. And cryptos? They'll be all over the map, reacting to every word out of the Fed's mouth. This is a scenario where volatility reigns supreme. Chapter 5, Scenario 5, Rate Cut Fiesta. More to come. Get ready to party, because the Fed is turning on the spigot of easy money. They're cutting rates and hinting that more cuts are on the horizon. This is the risk-on signal the market has been waiting for. The dollar? It could weaken significantly as investors seek higher returns elsewhere. Stocks? They're going to love this. We're talking about a potential melt-up, folks, as investors pile into risk assets. Bonds? Yields could plummet as investors flock to fixed income. Gold? It'll shine bright like a diamond as a weaker dollar and inflation fears drive up demand. And cryptos? Get ready for a wild ride, because this is their time to shine. This scenario is all about riding the wave of optimism, folks. Chapter 6. Scenario 6, the hawkish shocker. Hold on to your hats, folks, because this scenario is a real curveball. The Fed surprises everyone by keeping rates unchanged and delivers a hawkish message, signaling that rate cuts are off the table for the foreseeable future. This is the Fed slamming on the brakes and yelling, "Recession? What recession? The dollar? It's going to skyrocket as investors seek safety and higher returns. Stocks? They're going to hate it. We're talking about a potential sell-off, folks, as investors flee risk assets. Bonds? Yields could spike as investors demand higher compensation for the perceived increase in risk. Gold? It's going to get hammered, folks, as a stronger dollar and risk aversion dampen its appeal. And cryptos? They're in for a rough ride as investors seek safety in more traditional assets. This scenario is all about battening down the hatches and weathering the storm. The Fed's decision, your market roadmap. There you have it, folks, the potential market-moving scenarios we could see following the Fed's crucial rate decision on September 18th. This isn't just about numbers on a screen, it's about your hard-earned money. Remember, the Fed's communication is just as important as the actual rate decision. A hawkish cut could send shivers down the market's spine, while a dovish hold could ignite a rally. The bottom line is this: stay informed, stay agile, and stay invested. The market rewards those who are prepared and punishes those who are caught off guard. So do your homework, manage your risk, and get ready for the ride.